Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities look set to consolidate ahead of FOMC meeting. Expect the outcome out there tonight. It's expected to trade range bound after sixth consecutive session of winning streak. SGX Nifty at this point of time indicates a mildly negative start coming in for the Indian equity market. US stock markets right now, they tumbled last night on account of resurging fears around the banking sector ahead of the Federal Reserve's crucial rate decision. Asian shares too have been trading mixed this morning. The trades have been thin in Asian share by the holidays in China and Japan, though markets in Hong Kong are open at this point of time. FIIs, they've bought shares worth around 1,997 odd crore and DIIs have sold shares worth around 394 odd crore. Titan would be reporting in the March quarter earnings today, so do keep an eye out on that one. It's a big one that's coming on board today. Scorecard to be reported for the quarter ended in March and for the year. The net profit may rise more than 50 odd percent to 737 odd crore, aided by the shift in the wedding season. In bunch of results that we'll be tracking this morning will include the likes of course, Titan, Tata Chemicals, Adani Wilmar, Bajaj Consumer Care, Godrej Properties, Sula Vineyards. These are going to be some of the names which will be in focus on account of earnings. But let us get going and discuss some stocks and strategies today with Rajesh Palviya, the Senior Vice President Research, Head Technicals and Derivatives at Axis Securities. Good morning there.
Good morning, Nickey.
All right, I'm going to start off. It's going to be a crucial day today ahead of the crucial FOMC meeting outcome. Do you think Nifty is trading near that crucial resistance level of around 18,200? And once that's surpassed, will we witness a further short covering coming towards the 18,400 level? How will you play the markets today?
Yeah, definitely. So looking at overall setup for market, it seems to be on the bullish side only. Yes, as we are entering to the big event of Fed outcome. So ahead of that event, yes, a lot of call writing activity was there in 18,200 strike. But looking at the overall texture for the market, it's a buy on dips market until we breaks below 17,900 level. So one should remain on the long side of trade. If you get any kind of volatility in the market and if you get any dips, it should be used as a buying opportunity. On the lower side, 17,900, 18,000 strikes are attracting more put writers. So which clearly suggests that, for these weekly expiry, we are going to have some range bound session. Some consolidation action could be there in range of 18,000 to 18,250. And either side breakout will decide the major direction from here onward. But looking at the overall breadth and looking at the overall strength indicator for across all other sectors, we believe that there could be a possibility of breaking out on the higher side. And once we able to take out 18,200 250 zone on a closing basis, then possibly yes, this rally can extend towards 18,400 also, led by short covering action. So buy on dip should be a strategy for initiating this range bound session. One can initiate short straddle strategy for Nifty for 4th May expiry. So one can go short in 18,100 call and put. Here you will pocket around 121 rupees as a premium, and your break even for both the direction would be 18,220 on the higher side and 17,980 on the lower side. So we are initiating this short straddle strategy to play this range bound behavior, and we are anticipating that this expiry could be around 18,100, 150 zone on.
Talk about Bank Nifty, it's formed a small-bodied bearish candlestick pattern on the daily time frame, Rajesh, out there. What do you make out of it? It's been making higher top formations for 6 days in a row right now. But your strategy on this one?
So long build-up was clearly there in the previous session also. Yes, some profit taking was there from the higher side, but still looking at the overall setup, we believe that, until Bank Nifty not breaks below 43,100, 120 zone, it will remain on the bullish side for the near-term trend also. So very strong setup for most of the banks, private and PSU, and we believe that, this momentum can continue further as earnings season is also going very well for the banking stocks. So we believe that, If any dips comes near to 43,100, one should use these dips as a buying opportunity. Keep a stop loss of 43,000 to remain long. And once we able to take out 43,500, this rally can extend towards 43,800 also. So Bank Nifty setup is also bullish. Your stop loss should be around 43,000.
All right, I'm going to chat about Ambuja Cement and Tata Steel and how they look on charts in just a jiffy. But two earning profitable bets for our viewers right now before we address the stocks of the day.
So Tata Steel setup is looking attractive. In the previous session, we have seen long addition, and looking at the overall metal stocks have rallied quite well in the previous session. So we believe that Tata Steel can continue further more upside momentum towards 118 to 120 marks. So one can remain long with stop loss of 107. Ambuja Cement is still consolidating. If stock crosses above 400 level, then only we can expect some, fresh buying action or short covering action in the stock. So till stock not crosses above 400, we will wait for those level to take out. Then we will initiate the buy. Looking at the near-term, short-term setup, we believe some consolidation action could be there in the stock on the lower side. 380 is the important support area. So 380 to 400 could be the possible trading range for the today's session.
All right, that's the word coming in for Ambuja Cement and Tata Steel. Of course, these two companies have reported good set of March quarter numbers. Bunch of stock, apart from Ambuja and Tata Steel, we'll be addressing the whole banking sector, at least select names which will stand to get affected by the insolvency of an airline out there. ICICI Bank also is expected to be in focus. But let's get going and first address the first stock of the day, which is Tata Steel. It's reported good set of numbers. The beat is coming in from the Indian operations, which is the maximum, is a major contributor coming in from the operational performance of the company. And if you talk about the debt level, let's also come down for the European business overall. Net, we are looking at good set of numbers coming in from Tata Steel. Consolidated net profit is down by 84% year-on-year basis. If you talk about the revenue, that has also slipped by 9.2%. And if you talk about just the EBITDA performance of the company, that has also gone down by 52% on year-on-year basis. But if you talk about what the poll expectation was, revenue came in way higher than the poll. EBITDA came in like a strong beat, coming in 7,219 odd crore was the EBITDA level, right? Street was working with an estimate of around 5,755 odd crores. So you can see massive beat coming in from the operational performance coming in for Tata Steel per se. Ambuja Cement too has reported in great set of numbers coming in there, but we're going to be addressing in the markets open for you just in a minute before we kind of address the remaining stocks and news out there. Clearly, we are looking at a negative start coming in for Nifty 50 right now. 6 consecutive session of gains out there. And finally, we have given to some amount of selling pressure in sync with major global cues out there, giving in to the global cues. Down and out with losses of more than 0.25% on Nifty 50. 18,000 mark has been held on to. 18,100 mark has clearly given up early in trade today. Bank Nifty, also that's the one where we are looking at splendid amount of even losses coming in for Bank Nifty index. 0.5% of losses coming in for Bank Nifty. So some amount of resilience that was shown by the banking sector overall also seems to be giving up at this ahead of the crucial FOMC meet out there. Metal index down and out with losses of around 0.25% out there. Talk about the other sectoral indices that we have on our list right now. Auto down and out again. 0.25% even gone out on that one. And Nifty Pharma index too has been trading in red, has opened in red right now. And in terms of the other sectoral indices like FMCG, talk about the flat with some amount of negative bias out there. So that remains to be seen. Infra too at this point of time is trading down with losses of more than 0.1% out there. Good gains coming in for realty index, right? We've seen some amount of traction building in for last couple of days. And in today's session, where all the sectoral indices are actually down and out, realty index somewhat has been holding up, not exactly that higher, but some amount of positive momentum. Nifty IT index, that's the one with sharp losses out there, close to 1% out there, and the energy index too is down and out with losses of around 0.25% out there. In terms of advances and declines that we have, 9 advances versus 41 declines. So market breadth at this point of time is, beg your pardon, we're going to be seeing in advances and declines again. We have 11 advances versus 38 declines. So market breadth at this point of time seems to be skewed in the favor of declines. Top gainers and top losers that we have on Nifty list right now: BPCL, Apollo Hospital, Asian Paints. These are some of the top gainers that we have on our list. Tata Steel, well, we need to see how the market is behaving with that one. A little bit of fluctuation. IndusInd Bank, Bharti Airtel, these are some of the other gainers that we have. Cipla, there is a development out there, which I'm going to be addressing in just a jiffy. HUL, Tata Motors, these are some of the top gainers that we have on our list. In terms of the top losers that we have on our list right now, Hindalco, JSW Steel, HCL Tech, these are some of the losers out there. So after Tata Steel's number, it's JSW Steel which is not doing well, because the entire metal pack at this point of time is down and out. Axis Bank, Bajaj Finserv, Infosys. These are some of the other top losers that we have on our list right now. ONGC, TCS, Britannia. Also, we could, if you could pull up Tata Steel and followed by Ambuja Cement, just to see how is that one stacking up for you. Tata Steel is a big number. It's a very good number, with India leading the way, lower losses coming in for Europe, debt reduction overall, dividends is like the cherry on the cake. So that's, looks like much of it is already factored in. What Tata Steel review in terms of BOFA has to say, it's maintained the buy rating and the target price of 132. It says that the EBITDA beat is driven by Indian operation and material uncertainty in UK. It highlights about the net debt reduction, talks about the phase commissioning, and also talks about Tata Steel UK, which is expected to be adversely impacted towards meeting its liquidity requirements. Ambuja Cement, that's the one which is coming up next on your screen right now. Some amount of massive, not massive, really slender gains, 0.5% on there. Ultratech Cement was downgraded yesterday after the management suggested that inability to pass on large price hikes. So that's the one which was, down and out. But Ambuja Cement is holding up. CLSA, however, has maintained that underperformance rating out there, and target price of 395 for this one, pretty much in line with what the stock is trading at. It says that the 4Q is largely in line, and the guidance have been reiterated when you talk about the EBITDA per ton performance of around 300, 400 to ton. In terms of the EBITDA per ton performance, there is an improvement in FY24 and doubling of capacity, which is expected to play out in 5 years. It's essentially the lower costs which have led to sequential rise in the profitability. Overall, it's somewhere a positive performance coming in for Ambuja Cement. Remains to be seen if it's, gives up some of the gains by the close hour of the trade. Go Air insolvency impact. I wanted to discuss this enough and more. There is this whole insolvency which has taken place, and Jefferies has come out with the impact, what it has on banks right now. It's based on the filings for April 21 and September 21. They understand that the loans from banks were to an extent of around 2,500 crore, which is a very minuscule amount of the overall sectoral loans. The banks which have the exposure, ICICI Bank and Central Bank, is what Jefferies has spoken about. It could be to an extent of around 700 odd crores for Central Bank, and for ICICI Bank, it is to an extent of around 350 to 400 odd crores out there. So that's clearly the number that we're looking at. It actually augurs well for the other aviation stocks. So BOFA has come up and, reported on Interglobe Aviation. It has maintained the buy rating. The target price is to an extent of 2,700 rupees for the Interglobe Aviation stock out there. So that's a significant amount of upside there, right? It says Go First Insolvency is expected to remove 9% of domestic supply. So that's a big number, right? With 9% market share is going off the table, you expect a demand to only pile up for the existing players. So something like an Interglobe Aviation, in anticipation of that, it's a stock of the day clearly. 6% gains coming in on account of the insolvency which has taken place for Go Air. And the beneficiary to that is Interglobe Aviation clearly. It believes that the company's unique growth opportunity, it's one of the lower cost provider that we all know about, Interglobe or Indigo for that matter, with the largest market share in structurally growing Indian aviation market. It also speaks about the growth not being completely priced in at 13.5 times FY25 EPS. So that's the one that we clearly need to keep an eye out on. Interglobe Aviation, Cipla, one of the top gainers that we have on our list right now. US FDA has issued zero Form 483 observation for the subsidiary Invagen Pharma, US manufacturing facility out there. It was US FDA conducted the inspection at the unit from April 24 to May 1st, and there was zero observation out there. That's sitting down well for Cipla. A little bit of traction coming up for Cipla. But the stock of the day clearly is Interglobe Aviation. We aren't talking about Tata Steel, we aren't talking about Ambuja, but we're rather talking about Interglobe Aviation. Rajesh, come in on this one. What do you make out of it? Interglobe Aviation, there is more steam to the rally out there on the charts?
Very strong setup for Indigo, and looking at the overall setup, we believe that stock now given a breakout on about 2050 level. So looking at this breakout, we believe that stock can further extend its move towards 2250 also. So it's a direct beneficiary of this go first insolvency, and then looking at the kind of open interest in the previous session and follow buying in the today's session also, we believe that one should remain long with stop loss of now 2140. So Indigo is looking attractive. 2250 could be the immediate target in the continuation of this uptrend. And looking at the opening of this market, we believe that market is holding the ground at around 18,050 marks. So we believe that some consolidation action could be there and some buying interest could be there in the stock specific front. So one should focus more on the stock front. Looking at the opening, we believe that LIC Housing Finance can be another stock where one can focus. This stock can do well in the today's session. The setup is indicating that this stock can really further higher towards 375 to 380. One can buy this stock with stop loss of 350.
All right, so that's the word coming in for LIC Housing Finance along with the Interglobe Aviation out there. That's clearly the stock of the day today, but enough and more has been spoken about the entire strategy for the markets and Tata Steel along with Ambuja Cement. But Rajesh, thank you so much for taking out the time and speaking to us this morning. All right, so let's get on to the fundamental side of the discussion, and we are being joined by Ihab Dalwai, fund manager at ICICI Prudential AMC out there. Good morning there.
Yeah, good morning.
All right, I'm going to start off by asking you your assessment overall on the Go First insolvency which has taken place. Clearly, we are seeing the entire aviation, Interglobe Aviation specifically doing well. The stock is up by more than 6%. Overall, your view on this space, and what do you like within this space out there?
Correct. So I won't be able to comment on any stock specific, but I can comment on the industry. What we've seen in the aviation industry over the last couple of years, especially, is that, and this was especially induced by COVID as well, that the sector has been going through consolidation, and especially after a big conglomerate also entering into the space in a large way, the sector is expected to consolidate going ahead as well. And for any industry, consolidation is good from profitability and pricing perspective for the players who survive and the existing players. So for any existing players, I think lesser the number of players in the industry, the better outlook for the players which survive. And that's how I feel the industry outlook would shape up. And especially what we are seeing from a demand perspective, that was on the supply side, and what we are seeing on the demand side as well. We've seen strong domestic demand as well. And mind you, this has been at higher yields as well. So what few of the industry experts have concluded is that Indian flyer is willing to pay up for the tickets, for ticket prices, and So, which is good for the industry as well. So from demand side also, it looks encouraging. So tight supply, good outlook on demand bodes well for the sector or the industry.
All right. Because there is this entire 9% of demand, or rather the supply, which is taken off from the table with the insolvency which has come through specifically. Do you think any more players, or you expect, like you said, you expect more amount of consolidation, but would it like really percolate down on the bottom line performance of the companies? How are you looking at it in terms of valuations as well?
So this being a cyclical sector, it is difficult to value these companies on a traditional valuation matrices. So one method of valuing these companies is to have to create a normalized environment and try to assess the company on a normalized environment. Because in terms of capacity addition, there is generally an outlook of how much capacity these companies would be adding, because they have placed the orders for the planes, and one can have an estimate of yields and have an estimate of load factor, and based on which they can try to arrive or build a normalized environment, and based on that one can try to give a multiple to the earnings and try to see where the valuation is. To value these companies on trailing or 1 year forward becomes difficult, because these are like high cyclical companies and they have significant operating leverage, especially on the because most of these planes are leased, so that lease cost is a high operating cost for them.
All right. In terms of the operational efficiency and also the leverage profile, let's also talk about metal companies. Something like a Tata Steel has already come up and reported numbers, decent set of numbers. As usual, it's the Indian operations which has done well. Some amount of losses have reduced for the European business out there. Pain point coming in for the UK business, which is expected to be materially impacted by the liquidity crisis. That's the commentary coming in. Overall, how do you look at the metal basket per se? Do you think the ferrous side of it, something like steel stocks, they still hold up well? The valuations look attractive as compared to the long-term averages. How are you playing the entire sector right now?
So broadly, the view on metals as a space is kind of neutralish for me, at least. See, what had happened last year was that because of high energy prices, most of the converters had faced margin compression. But what we are seeing is that slowly and steadily, sequentially, the margin profile of these metal converters is improving as global energy prices have come down, because energy is an input for these companies. Broadly, for the metal price per se, one has to take a view of how aggressively China continues or starts spending on infrastructure and property. So at least the initial feeler, which our assessment of China reopening, which was last to reopen after COVID, is that the focus is more on the service side, more on consumption side for China, rather than the conventional method of spending, which is spending heavily on infrastructure and infrastructure and manufacturing, and also on property. So we are seeing that spending is more on the service side. But having said that, I believe that in the medium to long term, the Indian metal companies would continue to gain market share on the global landscape, because we are competitive on pricing, because we have captive mines as well in certain cases, which makes us competitive on the global landscape. So the Indian companies would keep gaining market share on the global landscape and would keep growing as the Indian GDP would keep growing.
Let's talk about FMCG sector overall. Let's a little bit of defensive space out there and a complete deviation from what we were talking in terms of metal. What do you make out of it right now? Food and beverages division, typically the segment has done well. The numbers that Nestle has come up with numbers, HUL reported steady set of numbers. Slew of them, Dabur will be coming up with numbers this week. What do you make out of these stocks right now? Revenue seems to be pretty decent for these companies. Valuation rich for some of the players given their profile. But overall, what's your view on the FMCG space right now?
Yeah. So similarly, FMCG space also was impacted because of high commodity prices, and as a result of which these companies had to increase their product prices and pass on these prices to the end consumer, which ultimately had an impact on the volume numbers which these companies were reporting. There are few exception companies which continue to report high volume numbers in spite of high price hikes which they've taken, which speaks phenomenal of the brand which they possess, because they've been able to pass on the entire price without impacting volumes. But most of the FMCG players have seen volume impact because of high pricing pass on which they've done. What our assessment is that slowly and steadily these volumes would pick up as these companies take price cuts with the fall in commodity prices. So volume should pick up. But broadly, the view on the sector is that this sector continues to trade at very high multiples. So from a portfolio perspective, what we try to at least do is that we try to find similar characteristic businesses to FMCG businesses, which are available at lower multiples. And as a result of which, at least from a portfolio positioning, I like pharma as a space versus FMCG, because they have characteristics similar to an FMCG space and are trading at almost half the valuation of which the FMCG space trades at.
Right, you prefer pharma over FMCG in terms of the defensive space per se, but let's just stay on to the entire discussion around the FMCG space and baskets right now, because we aren't seeing really momentum coming in terms of demand, right? Urban demand still remains lackluster. Rural demand continues to surpass urban demand for last 6 consecutive quarters in the entire basket right now. Price hike aren't that really coming through. Yes, I do agree that the cost inflationary pressures have started ebbing, but when do you see the demand coming in full sync for that one that will justify the valuation that the FMCG names are enjoying right now?
Correct. So broadly, what we've seen across consumer baskets is that when, be it discretionary or staples as well, when we see a very sharp price increase in any commodity, in any product, it leads to some tapering of demand. Because it has an impact on affordability, because income levels don't rise in sync with how the costs have increased. But over a period of time, as a couple of years pass by, the demand picks up as affordability increases and price hikes are lower than what income growths are. So we are confident that demand would eventually pick up both in urban and rural spaces. But I think it's still a couple of quarters away, but it will eventually pick up is what our broad view is.
All right, so we'll leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you so much. Thank you.
Right, so the stock and the themes that remain in focus for the day is Interglobe Aviation, which is up by 5%, and SpiceJet, which is up by more than 3.5%, with Go India going insolvent out there, filing in for the insolvency application. That's the one where the market share seems to be going into, and these stocks are reacting positively on that note. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.